Good morning, traders. Welcome everybody this morning to GameEdge Pre-Market Prep on Wednesday, September 3rd. As always, here at GameEdge, we'll cover our three pillars: sentiment, structure, and trend, as well as some individual equities at the end, and our 0DT structure trading plan for today. Join us at gameedge.us. You can sign up for our newsletters, which go out on the weekends, extensive educational content via our tools and thesis and how to navigate the SPX option structure. So put your email in and you'll be delivered that to your inbox. And then free courses. This is all free education that provided here for you at gameedge.us. Sign up for our GameEdge FastPass course. That's our flagship education course. Again, covers the options market, the tools we use, our philosophy, and how we navigate and trade the options market every day. And two other free courses down here: School of Options. If you're new to options trading, make sure you sign up for that, as well as the mental side of trading. Obviously, we all know that's an important aspect of trading that's overlooked many times. And then if you click on the pricing tab, you'll be taken to our WAP page, Discord, where you can join us in our community. Again, a great community of traders from all backgrounds and all wide experiences, from new traders to former market makers and large money managers. We provide an in-depth analysis SPX game plan every day that goes over our levels and how we're going to trade those, as well as all of our tools. Again, 14-day free trial, all the tools turned on. So, all right, let's jump right into it for today. Market trend model based on the tick index to get us orientated. This bolded white CT is our intraday instantaneous CT. And then we add what we call the railroad tracks. These are shorter term moving averages for momentum. We saw a turn back to the upside intraday yesterday. We were watching the market trend model. Really did not make a lower low as we were traversing lower in the SPX here, as we saw another pullback into the afternoon there. And then we actually started curling back up to the upside, crossing these shorter term moving averages. This is where we start progressive exposure within our overall portfolio. And then aggregately, we would add exposure as we continue back to the upside. Again, that is up to you to manage your own portfolio, but this is how we would do that. Obviously, the breadth indicator, new highs versus new lows. New highs were just barely outpacing new lows, so not a significant expansion in the overall breadth. And then we'll draw our attention to this filtered cumulative tick indicator here in this section. This is plus 1,000, minus 1,000 larger block orders. Obviously, this is institutional or larger market participant orders that we're filtering out to see if there's more buying versus selling. And obviously, we know the larger money managers and market participants move the overall market. So we did recover nicely back up, but we're still below zero. So we'll continue to watch that today to see if we see selling come back into the overall market. And then again, down here is just our cumulative tick. If it's below zero, there's more selling than buying occurring in the overall market. So this is our tick that includes all the exchanges. We'll move on to our tick RC. Again, this is a little bit more quality tick. This is what we base our mechanical portfolio on, P-trans to PGEX. As long as we're above the colored ribbon and we're in a positive slope, our mechanical portfolio is turned on. And we saw this really start moving back to the upside in the afternoon. This is obviously indicating more buying versus selling. And as we start crossing these shorter term moving averages, again, we're prone to failure, but we start progressive exposure, if you wish, within your overall portfolio. And then we aggregate this. And we have specific tag combos that we base trading decisions on. So come join us and you can learn more about how we use the market trend model to stay on the right side of the market. But the quick takeaway is we saw some buying in the afternoon, crossing back above these shorter term moving averages, and we'll need to stay above this for the rest of the day, indicating more buying versus selling in the overall market. All right, let's move on to the SPXA. We're looking at the SPX option structure. Obviously, it's the largest, most liquid and notional value. That's why we look at it to get an idea of where market participants are positioned via option structure. We separate the SPXA and the SPXP. The SPXA is our cruise ship. Again, if you look over here, our web app, these contracts do not turn over as rapidly as the SPXP. So we're basically looking at the monthlies here. We are call dominated above and below spot price. We have seen some erosion of the out of the money call speculation above us. So you can flip back and look at our other pre-market prep videos and stop and pause your player and compare the SPXA charts. So again, as the out of the money call speculation starts to erode, the possibility of price appreciation to the upside does start to decrease a little bit. And we've been really pounding about this transition area. It's going to be a key level to stay above. Obviously, we were below significantly yesterday, and now we're trying to recapture that pre-market. So this 64, 45, 50 area is going to be really important for us to stay above. That puts us in a little bit more positive gamma call dominated area that leads to price appreciation. And then obviously we'd want to see this repair itself without the money call speculation. So these red negative net deltas would turn positive, and that would lead most likely to price appreciation up towards that 6,500 level. To the downside, we're still call dominated. So again, pullback should be supportive unless we start seeing a significant erosion of this call structure below us. And then we have the transition down here at 63.20, key important area, obviously, to stay above for more supportive type action. Below, we'd get a little bit more negative and cautionary, and we see 6,300 would most likely be that next area that we could test down below. So that's it for the SPXA. Let's move on to the SPXP. All expiries turned on here. You'll notice, obviously, these are contracts turn over much more rapidly via 0DT as well as weeklies. We are put dominated, and obviously that's important within the overall structure as price will open. And we'll look at transition areas as well as the iron condor that's in place for today. I posted that on X this morning. And then within our community, we have extensive commentary about what that means with our overall trading plan around these levels for today. The main takeaway for our YouTube followers, our X, is we have a significant confluence of GEX and DEX transition that has been implied here by our algos, 64.45, 64.50, as well as the upper IC strike. So if we're above that, we'd most likely look for price appreciation up towards 64.75 or up towards 6,500. You'll notice that COI is up here. This is the highest call open interest for the day. So again, if we're above these levels, we'd look for appreciation up towards 6,500. First stop that we want to recognize, though, is COTMC. This is where out of the money calls go in the money. Again, this historically is an area where we can see monetization and possible stalling area. Then you also notice that we do have in the money puts above us within this overall structure. So again, those will come into play as price traverses this structure to the upside. And then you'll notice the transition here, 64.30 to the downside. And then we have COTMP and the lower IC strike. So any pullback within this overall area, we'd watch for price most likely to bounce. We do not anticipate 63.70, 75 to be a magnet to the downside. But if we do lose this area, we would definitely be more cautious as we're in a more negative put-dominated structure, and then we'd have the opportunity for price to rapidly depreciate, possibly down towards 63.50, and then we'd watch that area or below some of the lows that we saw yesterday. All right, let's move on to the SPX P, what we call GEX ratio or gamma edge ratio. We were discussing this negative slope as price was appreciating. Obviously, divergences we were watching. Sorry about that. But yesterday, as the bounce was starting to occur and then heading into today, we're seeing a slight positive slope. So we're above 1. So this gives the edge to the call speculators as well as the bulls, staying above that overall 1. Again, so this is call gamma versus put gamma on short dated aspects. So again, the call gamma is stronger than the put gamma on the overall ratio. So again, that gives us that positive slope up towards the 1.5 area. So again, we'll continue to watch this day over day. We're barely above the 1. So again, we could start dropping down below that 1 if we see the overall call speculation start to wane significantly and the out of the money put speculation start to come in the overall structure. Obviously, that would change that ratio to dropping down below 1. But as of now, we're regaining a slight positive slope. So the edge is to the call speculation and to the bulls within the overall market. SPXP net stat, this is the highest sensitivity areas for heading into today. So I think you'll notice that confluence of 64.50 out of the money calls there. Again, not significant at the moment, that right-hand plane integral compared to the in the money calls. So any pullback should be supportive as long as we're above that 6,400 level. If we start capturing the 64.50, we'd turn these out of the money calls in the money. That's why we say gamma edge moneyness matters. That positive delta makes our book longer. The dealer's book shorter because they're short those calls. And again, they have to buy to hedge. So we would look for a long above that 64.50 area for a move to the upside. Again, this would also be driven by our intraday volume metrics via our vol m command. So we'd want to see call speculators targeting higher strikes via our call centroid that we discuss extensively, and we'd want to see that put centroid also rising. So both of those in a positive slope via our vol-m command would give us greater confidence for price appreciation to the upside. And again, if we're not seeing that and we're seeing stalling right in that 64.50 level, that may be an opportunity to short, especially if we see the out of the money put speculation, call and put centroids in a negative slope, as well as the market trend model turning to the downside. We'll notice the charm here, 6,400 out of the money puts, fairly balanced. The out of the money calls are winning though at 6,500. So again, that upside 6,500 may be the cap on price if charm continues to exert its force up there and we do not see a significant amount of out of the money call speculation. Obviously, first stop 64.50 and then 64.75 to the upside. And we see the gamma highest sensitivity levels. We're talking about that 63.75 to the downside. That's why we'd be extremely cautious if we started moving below the IC. We can increase the speed to the downside also with this net gamma here. And then those out of the money calls, again, gamma is our overall accelerator for price movement, and it's highest at the money or in the money. So those OTM calls, if we start moving above those and drive those in the money, then that would obviously have increased our sensitivity of price appreciation around that 64.50 level. And then we have Vanna here. If we see a volatility drop, those sensitivity levels also. All right, let's move on to the delta balance. Key takeaway, I'm sorry about that. All of our charts here at Gamma Edge are interactive, and you can zoom in and scroll over. So obviously I can scroll over. This gives us our strike for the day down towards the bottom there. You see it's September 3rd. The main thing to take away here is that we separate these from the right-hand plane and left-hand plane. So above spot price and below spot price. The out of the money call speculation is still declining, a negative slope. So again, that out of the money speculation, we need to have price to drive higher. So those call speculators need to start targeting higher strikes. Now we do have in the money calls below us, as we've already seen with our web app. So again, those will be supportive. Delta balance at 1, but again, we may be capped on price unless we see the out of the money call speculation really start driving higher. And the key cautionary tale heading out in time, projected, path dependent via market participants positioning is that the delta balance is dropping on out towards obviously September 8th. That would be heading into next week, and then we September 5th and September 4th. So Thursday into Friday looks fairly bullish, but then we see a dropping next week. So again, we could see weakness after this Thursday, Friday into next week, unless we see the structure repair itself. So this is in the money calls. So this would be most likely out of the money put hedging. Or a closing of those calls below us, and then we see the delta balance really dropping. Now the out of the money call speculation does ride up and then fairly flatten out. So again, we'll continue to watch this day over day. This is just a projection in time of where market participants are positioned. Obviously, this can change day over day, but this just gives an idea of where speculators are putting their money out in time. All right, let's move on to the SPXP 0DT. This is what everybody obviously is waiting for today. Call dominated above and below spot price. So that again will be supportive on any pullbacks within the overall structure. Again, unless we see the market trend model or the sentiment and structure change significantly via our vol metrics, that would be targeting to the downside via the put hedging. We see the drunken sailor range 6,400 to 6,445. Here, obviously, within this overall area, see the net OI, it's very low exposure. So again, will be driven by the opening and closing mechanically of market participants intraday 0 DTE. If we're below 6,400, we'd most likely look for a short down towards 63.70, 63.75. Again, we've already discussed being above 64.45, 64.50. This will be much more supportive, and the drive up towards 60.70, 75, as well as 6,500, and that most likely would put cap on price for today. Again, these IC strikes, obviously the call credit spread here, put credit spread here, will be exerting their force within the overall structure. So we'll watch that. So we could actually be contained within the structure, back and forth and choppiness action. We'll have to just watch what the intraday vol metrics are doing and see where market participants are positioning. Most likely we could end up with a crossing type pattern, which we've shown that before. Our call centroid and put centroid are crossing, so really there's no edge either direction to the upside or the downside, and you're just stuck within this overall range of a large choppiness price action. So we'll move on to the trading view chart for this morning. I've drawn out our obviously drunken sailor range, GEX DEX transition, as well as the upper IC strike and the lower IC strike. And as you can see, we've already tested this upper IC strike, the transition levels just extensively this morning now multiple times. So again, that's going to be that first area that we test, most likely to the upside. Again, if we continue to see a failure, this may be an opportunity to short for a short back down towards the midpoint, 64.15 of the IC. And you'll notice that actually is a kind of a TA level that we've seen overnight heading into this morning. So that will be a key level to the downside. And if we're below that, we'd look for the test of lower DS, and that be an opportunity for a long. We might see a bounce there, and then we see COTMP, and then the lower IC strikes down here. Obviously, we'd anticipate these would be bounce areas to the upside as long as we're remaining call dominated, and we see the market trend model be constructive, as well as our intraday vol metrics. All right, let's flip over to the SPY. Obviously, I've been watching this morning. P-Trans, Zero Gex, that's key areas that we want to stay above for the bulls. Qs are already above P-Trans, obviously, with the Apple and Google news that provide them a boost. You see IWM roughly at P-Trans, so you kind of get a theme here that we're at transition or slightly above transition, and we need to stay above those levels to be bullish. Below those levels, we'd be a little bit more risk off and cautionary. And then overall, we've covered the SPX heading in for today. Apple testing that plus Gex. I posted that on X this morning. Historically, that's an area, highest sensitivity or high local call speculation area. Sorry, that may reach a peak value where we see some profit taking. And then obviously our P-Trans to P-Gex portfolio is based on the move from P-Trans to plus Gex, where we take profit in that mechanical portfolio. And a few other stocks this morning, obviously, again, continuing that same theme around Zero Gex, P-Trans, obviously the N-Trans there, Meta at P-Trans, Zero Gex, NVIDIA just under P-Trans but above Zero Gex. So I think you already get the idea that we need to stay above these levels and start moving away from these transition levels to be more bullish within the overall structure. And you see Amazon holding P-Trans, Microsoft just above P-Trans, PLTR above P-Trans there, plus Gex to the upside. Snow we were watching a few days ago, and then Uber, obviously P-Trans 92, and then Robinhood, same deal, Zero Gex, P-Trans, and then really needing to cross over above these Zero Gex P-Trans levels for more probability for the upside. So thanks everybody for joining us this morning. A little bit longer, wanted to cover a significant amount of content. If anybody wants to go over anything, I got about a couple minutes. I can hang around. We can look at our web app. If any individual tickers anybody wants to cover. So quick takeaway, obviously back to our Zero Gex, our Zero DTE game plan for today. Within the overall drunken sailor range, going to be extremely choppy. Above the drunken sailor range in IC, we look for price appreciation up towards 64.70 and the 6,500. Opportunity to short, possibility at the top leg of the IC if we continue to see failure that we're seeing this morning, and speculation to the downside via our intraday volume metrics. We'd anticipate everything to be supportive within this overall structure unless we see a massive change in sentiment and volume targeting speculation to the downside via out of the money put speculation. So, all right, thanks everybody. AMD, sure, we can cover that real quick. Went over that one there on the price this morning. We'll look at the trading view chart. So call dominated above and below spot price. We're within the overall transition area. So above transition would be better in a more bullish call dominated positive gamma environment. 170 is PGEX, COTMC. So that'd be an area most likely I'd see profit taking first. You see COI up here at 200. So again, if the market cooperates and we see the structure continue to advance, obviously 200 would be that upper target. And then staying above 160 is really going to be important, COTMP, and the bottom of that transition area there. Let's look at Friday's expiry. Structure really doesn't advance much compared to the full expiry, and you see COI there at 167.50. So that most likely would be cap on price, 170 COTMC. Structure really not advancing. Call dominated though, so any pullback is an opportunity most likely to get involved. Still looks bullish. Structure still intact on longer term time frames. 5.49%, 9 points expected move there. So that would put you right about the 170 level. So CO and TMC. So that'd be where I'd be looking for price appreciation if you were long. So, all right. Thanks everybody. Thanks for joining us. Again, like and subscribe on X and YouTube. You'll be notified when we go live. We've been trying to do mid cap or midday recaps roughly in between 12 and 1 o'clock. So sign up for those. You'll be notified when we go live. And then obviously join us at gameedge.us and review any of the content that we've previously posted, as well as all of our X posts. We'll be providing more updates, obviously, throughout the day on X, individual equities, if we see any around specific levels, and then updates on the SPX structure, as well as our intraday volume metrics. So thanks, everybody, for joining us, and